All right, Chevron just out with quarterly results. They came in with earnings of $2.51 a share. That was better than expectations of $2.43. Revenue came in at $50.67 billion. That was also ahead of estimates. Cash flow from operations coming in at $9.7 billion during the quarter. And then worldwide net oil equivalent production increased 7% over the prior year, with U.S. and Permian Basin production setting another quarterly record. Chevron expects, it says, to close asset sales in Canada, Congo, and Alaska in the fourth quarter. That's part of its plan to divest somewhere between $10 to $15 billion in assets by 2028. It also said cost cuts are underway. This is new news. They're targeting $2 to $3 billion of structural cost reductions between now and the end of 2026. And that's new news that the street had not heard about before. You can see that stock up by about 2.5%. I did speak with Mike Wirth, the CEO. He's going to be coming up on Squawk on the Street in just a little bit later this morning. But here's what he has to say about this. He qualified this. He described this as a good, solid quarter. Despite the softer commodity prices, did point out that cash flow is at the highest of this year. We mentioned that they have been giving cash back to shareholders, $7.7 billion. That's $4.7 billion in repurchases and $2.9 billion in dividend payments. He says that's about 2 times per share the energy index peers that they're faced with. He said they're probably close to about a 10% return of cash to shareholders. By the way, he did point out that Hess arbitration, that's the big question about what will happen next, whether they'll be able to go ahead with the purchase of Hess. That arbitration's still on track for May. That's going to be a big question. They're still battling with Exxon over who gets right of first refusal or not to go ahead with the Guyana assets that are involved with that. I talked to him a little bit about what it means for either a Trump or a Harris administration. He pointed out that he has worked with both these administrations in the past. They said what he'd like more than anything is just to see some continuity in the rules, because they are making long-term investments. For any of these major investments that you're looking at with fossil fuels, they take in long cycle investments. They are spending billions of dollars, and they would like to have some certainty as to what's happened with any of this. Did point out that under President Biden, it's not always been a friendly administration to them, but they've worked with that anyway, and they are still looking at record levels of oil production that they're putting out. They said there'll be over 1 million barrels a day in the Permian. A decade ago, it was less than a tenth of that. So very interesting to see what's happened with production over this time. If you get the Trump administration in, the expectation has been it'll be drill, baby, drill. But I think he's looking at a situation where they've already been doing that and thinks that you're not necessarily going to want to be hitting a lot more in production, that the Permian might be plateauing out at some point, too. So we'll see what happens with it. But right now, that stock up by about 2.8%.